Well, as the market rallies, will earnings season be the next major hurdle for stocks? According to FactSet, first quarter profit warnings are already near record levels. Our friend and FactSet's senior earnings analyst, John Butters, is back with us to put it all into context. John, welcome back. Good to see you. Earnings season, does it have the potential to stall or derail the market?
Well, Tyler, as you said, we're expecting a much weaker earnings season than we did when we started the quarter. The expected earnings growth for the index is now a decline of 0.4%. That's down from an expectation of 4.4% at the start of the quarter. And much of the reason we've seen that decline is the high level of negative guidance that you talked about. At this point in time, 93 companies in the S&P 500 have given negative guidance. That's the second highest number we've seen since we've been tracking the data back in 2006. And two sectors in particular really stand out: the consumer discretionary and the industrial sectors. Both of those sectors are seeing record numbers of companies giving negative guidance. And those are two sectors that are likely going to be impacted by the unusually cold weather we had during this past winter.
Well, you know, these analysts track the numbers not only for Q1, but they're also looking ahead to the second quarter, third quarter, fourth quarter. What are the projections that you're seeing so far? And to Tyler's point, how might this play out in the markets?
Right. Well, the first quarter is certainly expected to be the dip in the earnings season, in earnings for the next couple of quarters. If we look ahead, for second quarter, analysts are looking for growth of 8%, and then when we get into the second half of 2014, that's expected to hit. They're expected to hit double-digit earnings growth at almost 11%. So, one of the key things to watch this earnings season is the guidance, what sort of comments companies give, because if we do see analysts start to, companies rather, start to lower their expectations, we may see analysts take those numbers down. And on the flip side, if we see companies saying, well, the first quarter was a one-quarter aberration due to the weather, we still expect things to be solid for the rest of the year, you know, again, the market will probably take that optimistically if we don't see those numbers come down in the second half of the year.
Is the weather the principal reason earnings are going to be flat in the first quarter of the year, or are some companies using it as a fig leaf to cover up things that go deeper than that?
Right. Well, that's hard to say at this point. I mean, certainly in the past, we have heard companies use weather as an excuse, and we're seeing some of the boy who cried wolf syndrome potentially. But this time around, I think it is a legitimate excuse. Of the 18 companies that have reported so far, 8 of them have cited the negative impact of weather, most of those being in the consumer space, such as retailers, such as Costco, or companies in the industrial space that had difficulty transporting goods or transportation in general, such as FedEx and Cintas. So I think this quarter the weather is a legitimate issue in terms of having a negative impact on revenues and earnings.
So the spotlight will be on J.P. Morgan Chase next week. It reports its earnings. It's the big Dow stock reporting earnings on next Friday. What are you expecting from them? And looking ahead, how are the financials doing?
Right, so if we look at J.P. Morgan Chase, they're expecting about a 10% decline in EPS this quarter, and this would be the third straight quarter they've had a year-over-year decline in EPS if that's the case. And the financial sector is really an interesting sector because this quarter, it's really a middle-of-the-pack quarter. It's expecting about a decline of 1.5%. But last quarter, it was the leader in growth at about 24.5% due to strong results from insurance. And if we look ahead in the second half of the year, this is one of those sectors that's really expected to see a pickup in earnings growth in the third quarter and fourth quarter. So we'll certainly keep an eye on the guidance and commentary from these companies, as this is expected to be one of the best performing sectors in terms of earnings growth in the second half of the year and for all of 2014.
Right. Our quarterly visit with John Butters. Thanks a lot.
Great. Thank you for having me.
John is with FactSet.